Welcome back. You tune into Markets at Noon with me, Ankita Saxena, and with me is Srisanth Challa, and we're getting you all the action that's transpiring in the market. And we are talking about the earnings that are trickling in. And the next candidate is CCL Products. That is firing on all cylinders. In fact, the stock is hovering around its 52-week high right now. It's trading up almost 11% in the trading session on the back of very strong numbers that the company posted. It's a beat coming in on all accounts. The revenue is up 52% on a year-on-year basis. And we do see the profit also tick up 36% on a year-on-year basis. But now to weigh in on the numbers and the growth roadmap ahead, we're now joined by Srisanth Challa, who's the Managing Director of CCL Products. Hi, Mr. Challa. Thank you so much for taking the time out and joining us. Sir, the company has reported very strong set of numbers. The revenue is at 13-quarter high and the EBITDA at 23-quarter high. What has led to the stellar growth and performance?
So frankly, there's nothing abnormal about this quarter. It's exactly as per the guidance that we've given for the whole year. I think one of the comparisons that is being done is for Q2 of last year, where we had a plant shutdown. So that's why it may look like there's an abnormal growth, but this is on par with our guidance. We are given a 15 to 20% growth for this year. We are now confident that we'll be closer to the 20%. We are on track for achieving what we have committed.
All right. So 20% growth guidance is what you're suggesting for FY26. Am I getting you right?
Yes, that's right.
All right. And how has demand been across geographies, both in India and the global market?
So coffee demand has been quite constant and consistent, and especially in times of crisis, that's usually an opportunity for us. There's a lot of pressure in the market for looking at onboarding new suppliers who can be more efficient. So this is where we get a lot of entry into new companies. So usually with the tariffs, with multiple things that are happening globally with the fluctuations, it's usually a positive sign for us because we start getting access to a lot of customers whom we did not have access to in the past.
Right, Mr. Challa, also the coffee prices have remained elevated. In fact, they've remained elevated for a while now. How has that impacted your margins, and where do you see the coffee prices headed from here on?
So coffee prices have been fluctuating, to be frank. A few months ago, there was a substantial reduction. Now they've recovered again. The way that we function, we work on a cost-plus basis. So our EBITDA per kg more or less is constant. So it really doesn't have any negative impact for us, whether the prices go up or down. The only thing that gets impacted is our top line because of this fluctuation.
All right. I understand you work on cost-plus basis, and because demand has been very strong, let's also talk about financials. You've reported a total revenue of about 2,100 crores this year so far, considering first quarter and second quarter. Do you expect to surpass the 4,200 to 4,400 crore revenue mark for the full year FY26? Will that be a fair estimate?
Yes. So as of now, based on the current green coffee prices, that's what we are also looking at for this financial year. If the prices do correct in December, the guidance also might change a little bit. But our EBITDA per kg is the actual financial performance metric for our organization. So with that, the 20% volume growth, what we have projected, we're confident about that.
Right. Also, any plans of further capacity additions over the next 2 to 3 years across any of the categories?
So we don't need to go in for capacity addition, at least for the next 4 years. We've already doubled our capacities. We have spray as well as freeze-dried capacities in place. So we're not looking at any further expansion anytime soon.
And we did talk about coffee prices, and I understand that you work on cost-plus basis. But if you can tell us any guidance that you can share with respect to margins going forward because of any cost efficiency plans that you have?
Well, yes, margins-wise, we are expecting a little bit of an improvement to start coming in year on year. As the capacity utilization increases, we'll start unlocking the benefits that we get with economies of scale. Our product mix is improving, and also the range of products that we're offering is also improving. So we're quite confident that Stable and consistent growth is what we are looking at. Our mantra is more of a sustainable growth year on year.
All right, Mr. Challa, thank you so much for taking the time out and weighing